You're signing a partnership that is in many ways unprecedented. What is it all about?
This is the first time that we sign what we call an umbrella facility, that is a microfinance guarantee that covers 6 member states plus Serbia, which is in the Western Balkans. So this is unprecedented. We have an umbrella facility in other sectors, but not as far as social impact investing is concerned. Also, the size is somewhat unusual, I would say. It's 50 million, so quite a substantial amount of money for the sector that is still small, growing. Our idea is to provide affordable finance to microfinance borrowers with the idea of having longer maturities, lower interest rates, and not so much of collateral requirement as normal banking would consider.
This is not something new, on the other hand, for Erste Group, because Erste Group does social banking and invests in social enterprises, startups. How important it is for Erste then?
It's very important. Mr. Gilibert said it's size-wise, it's unusual. I think it's one of the largest facilities made available. I think that's still one of the problems of social enterprising, that in that world, a guarantee of 50 million is very, very, very big. In other parts of the business world, 50 million is not so much. What is, I think, very, very good about the facility, and in that sense, it's a new structure, that it is a regional guarantee, and that we can, in that sense, it's very flexible, it's very unbureaucratic. It helps us to achieve the impact as soon as possible, because we can use it over a region of EU states plus Serbia, wherever we see the best opportunities arising. Therefore, I think the usage will come a lot faster, and hopefully, 2 years from now we'll meet again, the latest, because we have to talk about an upgrading of the facility.
Is it also profitable for you? Because it's small scale, it's something that usually a bank wouldn't do?
We have a limited risk position. Whether it's going to be profitable will depend on the quality of the investments and the loans that we undertake. So in that sense, it's just a normal banking business, and if we make the right decisions, it's going to be a profitable business, and it has to be. I mean, one of the basics of social enterprise is it's not an NGO. It needs to support itself. It's not there to make money, but it has to be profitable.
But how would you sell it to social entrepreneurs that largely, or at least in my imagination, they try to do for even easier money, for crowdfunding, for different other loans? What's the added value here?
The added value essentially is, first of all, a financial added value. They would pay less than otherwise. They would have longer maturities. They could both fund working capital or investment loans. So the facility is extremely flexible. As I said, the collateral requirements are limited to the personal guarantee of an entrepreneur, so non-existence. But it's part of a toolbox. It's not the only financial source that social entrepreneurs are looking at. There is also a part of equity, which is not the case here. We have also a capacity building facility to supply equity funding. We work with business angels, for instance. They also supply money, equity money, to social entrepreneurs. So the idea is to create a whole financial ecosystem to support social entrepreneurs and microfinance.